Evening, everyone, and thank you for joining us for the Monday evening Forex breakdown. My name is Gail Mercer, and I will be your hostess for tonight. Will everybody let me know that you can see my screen and hear me okay? By typing in a Y in the comment box, I would appreciate it. Now, I would like everyone, thank you everyone, I would like everyone to take just a moment to read over the Nadex risk disclaimer. It is for your protection as well as ours, and basically, you should never trade with money that you cannot afford to risk. All types of trading, including Nadex binary options, call spreads, and touch brackets does involve risk, and you need to be able to accept the risk if you want to trade. Now, for those of you that do not know me, again, my name is Gail Mercer. I'm the founder of Traders Help Desk. I've actually been a trader for over 15 years. I started out trading Forex, and it's still the market that I love the most. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies. The New Trader's Guide to Trading Nadex Binary Options and Spreads. Trading Nadex Binary Options and Spread Using Currencies. And Trading Nadex Binary Options and Spread Using Candlestick Patterns. I've also been a speaker at the Wyckoff Volume Conference, Traders World, Traders Expo, and the TradeStation User Group. I do specialize in candlestick price formations, support, and resistance. I would like to invite you to visit tradershelpdesk.com to learn more about me and the indicators that I use. Additionally, you can always contact me at gm@tradershelpdesk.com. Now, tonight we're going to be going over the Forex markets. And what I like to do to begin with is to actually start out with the market reports that are going to affect us this week. Now, if I change this over to just the red reports, then you can see we do have reports just about every day with the exception of Friday. For example, tonight at 8:30 on the Aussie, you have the monetary policy meeting minutes. Then on Tuesday, we have the Bank of England governor speaking, and that would be at 4:30 a.m. Eastern Time. Wednesday will be the biggest day. You have the CPI year over year, and that's on the British pound. At 8:30, you have the CPI month over month on the Canadian. You also have the core retail sales and retail sales both month over month. Again, the 9 o'clock that morning, the Bank of England governor speaks again. And then at 8:30 on Wednesday night, you have the Aussie employment change and unemployment rate. And then Thursday morning, you do have the retail sales month over month on the British pound. You also have on the US dollar side, you have the Philly Fed manufacturing index and the crude oil inventories. Now, I would also look at some of the orange reports as well this week. And you can see that, for example, on Tuesday, you have the FOMC members speaking. And during this time, we can see market spikes simply from something that they said, because traders are interested in whether they're going to lower the interest rates again. You also see at 9 o'clock Wednesday morning, the FOMC member Evans speaking. And then at 3 o'clock, there's another member speaking. And then I believe it is on Thursday, you have even more speeches. You can see it here. Thursday from 2 to 4:30, they're also speaking. And then Friday morning from 10 through 11:30, they're also speaking. And the problem is that traders are watching what they say for hints as to whether they feel that we need another interest rate cut or not. So you could see some volatility during that time period. So it's just something to keep on your radar. If I saw a trade come in at 155, probably would not take it, knowing that the FOMC members are speaking at 2 o'clock. Everybody understand that? Okay, other than that, let's go and let's actually look at some of the currencies and see what, where the support and resistance is. Now, the first one I'm going to start out with is the Aussie dollar. I always start over on my left-hand side and I work my way to the right-hand side. Now, you'll also see that we have some big plus signs on my chart and some smaller plus signs. The big plus signs that usually have lines around them are the support and resistance areas, okay? So that identifies where price may hit a resistance or a support area, okay? Now, in this case, over on the weekly chart, you can see that it had reached an area of support, okay, and it has tested that area 3 times now, okay, and to me that's pretty substantial because it tells me, hey, there's a lot of support in this area. You're also developing candlestick formations in this area. So in this case, I would actually be anticipating the Aussie dollar to actually go up and potentially test at 68.84. Now, when I come down to the daily chart, you can see that it is moving up, but it is not overextended, okay? However, you do see that it's starting to develop a resistance area here. What I would like to see is either it tests 68.10 and fails to break through, or it continues up to where I thought it was going to go, which would be here at 68.84. Now, what I want to do is look down in time to the 240 to see if this is lining up with what I anticipate already. And you can see they have come down and they have formed a support area here. So the next place for them to go would be up here to potentially test the 68.09 area. Now, if they fail to break through this area, we could see a downward move. But again, I would think that they would test this area, and then we need to wait and see, okay, does this resist price, or are they able to break through it? Any questions on the Aussie dollar? Okay, let's move along to the euro yen. And on the euro yen, you can see that we are right at the top of an area on the weekly chart. You can see they're coming back to test this area, okay? And this tells me, even though we had a bullish engulfing, that bar actually engulfed the 3 previous bar. So I'm thinking we're going to get probably a 50% retracement of that bar, which is probably going to put it about here, okay? The 3 indicators I'm using at the bottom, this is the stochastics, this is the RSI, and this is the ADX. These are my proprietary versions of them, Brian, that I have color-coded them and changed, put a smoothing algorithm in it. So in this case, I'm thinking, hey, this may actually act as a resistance to at least push price back down to, I would say probably 118.25. When I look over at the daily chart, I also notice that we're overextended here on the stochastics. This shows the pattern very clearly that you are at a double top, okay? So this tells me my anticipation would be that this market is going to come down. So I would like to see on the 240 indications that it's going to come down. And in this case, what I would like to see is one of two things. Either it's going to test this moving average here, or potentially test this line of plus signs at 119.80. Now, if it does, and we get any type of divergence on the stochastics, that would be enough for me to say, hey, I might want to do an out of the money binary option to the short side. But again, I need to see that test before I decide to go into that market. Any questions on the euro yen? And what happens if it blows through this area? Well, then I'll let it retrace, form a support area, and then just go long. But with it being overextended, I wouldn't bet that that was going to happen right now. And again, the fact that this is overextended is going to give me a bias of, hey, I want to take a short, not a long. Everybody understand that? Okay, let's go look at the euro dollar. Okay, on the euro dollar, you can see again over here, they have tested and they've rejected that low, okay? And the stochastics is moving up. So that makes me think they may come back to about 1.1200. Now, over on the daily chart, okay, you can see they've pulled back and they have formed this resistance area here. That indicates to me that we may get a new test for support, okay? They're not able to push through this area. They need more people joining the bandwagon, so to speak. So usually that's where you're going to get this test down here at, I would say, right below the 1.1000 area. And then if they form a reversal bar here, that's where it's likely to go up, okay? So then if I look over to the 240, you can see that they have already tested this fast moving average here, and it was at about 1.1035. We may see them come back and test this area again, especially with the stochastics ticking up a little bit. But if that area continues to hold, okay, we could see them push back to here, and that's more than likely where the support would develop for the move over on the weekly to come back to the ATR, okay? So what I would anticipate right now is for this to come back probably to this ATR here, which is also coinciding with the slow moving average, and is going to form a double bottom here. That's where I would be interested in having a bearish candlestick pattern develop that shows, okay, this will, I said bearish, I meant bullish, a bullish candlestick pattern developing to kick off the next move to the upside. Everybody understand that one? Really kind of what it did here, okay? So it came back, it got more energy. That retracement here gave it more energy to go up. That's what I want to see on this one, okay? Okay, let's go and look at the British pound yen. We've had a major move on the British pound yen. Again, starting over here on the weekly chart, you can see that you have this line of dots here. Now that is an additional line that will resist price, okay? You also see you're just now getting the plus sign here that also indicates a resistance area. So this to me is likely an area that we will retrace off of. Now, considering that this was a very large bar, it went from 130 up to 137.9. This tells me that we should get a retracement to about 134, probably end up being at least to that slow moving average, which is at 134.88. Okay, if you look over to the daily British pound yen, you also see that you're just at the point of being overextended here. But again, you've had two wide bars here. It was generated off of news about the BRI exit, okay? So I would anticipate at least a 50% retracement of this area. That's going to be, let's see, 131, and I'm just rounding off, up to 137, okay? So you're looking probably at about 134. That's where I would anticipate the retracement to come in at, especially with this approaching that overextension. That's where I would anticipate to see that, okay? If you come over to the 240, again, on this one, my bias would be to the downside. I would want to see them testing right where they're testing right now. Would like for it to hold and a bearish bar develop that would potentially give it the momentum to push down to the 134 area, which is pretty much at the slow moving average here. Any questions on that one? I wouldn't enter too quickly. You know, you can see this has another hour and 45 minutes, because a lot of times what you'll see is that they'll need to come back and test this high here. It'll form what I call a micro double top, and a lot of times that's what will actually kick it off. Okay, you'll also see a divergence as it tests this top. You'll see a divergence. So again, you really do need that bearish formation before you decide to enter that market. Any questions on the British pound yen? And we are getting a lot of spikes because of the BRI exit information that's coming out. And you have to take that into consideration if you're trading the British pound currencies. The British pound dollar is pretty much the same. You've had this big move up. It went from 2,200 up to 2,700. That's a 500 pip move. More likely than not, it will come down probably to somewhere between 2,450 and 2,400 just from the previous bars. Okay. Now, I would like it better if this had been overextended, but with that bearish bar developing here, that could also potentially give you divergence here. Okay, what I would like to see is actually that this bar that is currently developing closes actually beneath the low of that. Okay, so if I entered this early, my anticipation would be that this would be a big bar. Does everybody understand that? It's actually a candlestick formation, but it won't come in until the next bar closes below it. Again, you're seeing that it's testing this right here. It will be very important that this is a bearish bar before going in. Now, this is one that has the touch brackets available on it. And one of the keys to the touch brackets is being able to stay in the trade. Now, what does that mean? Okay, right now you're trading at 2607, right? Your previous high is at 2706. So that tells me you would have to get a touch bracket that was above that level. So again, if we go back and say, okay, this is 2707, okay, you would have to go at least just in my opinion, would be 2751 if you wanted to short that market, okay? So if you click on the bid column and let it come up, you can see that in this case, your loss would be 145. The profit potential would be 105. To me, that's an inverse risk to reward, and I will not take it. Okay? And that immediately tells me, okay, I'm not going to be using the touch brackets on this. I'm going to be using the binaries. Okay? I don't do inverse risk to reward ratios. Any questions on that one? Now, could you go down in time and capture that, once that bearish bar comes in? Yeah, you can. But trading it from the daily right now, I would not do that. Okay? So let's go look at the USDCAD. And the USDCAD has actually been moving within a range from here to here. Okay? With it being at the bottom of the range, I would be looking for this to go back up and test the height of the range, because you're not, it's what I call a snake bite area. You go in from red to blue to red again, and I use snake bite because I'm scared of snakes, so it makes me back up from the screen, and I don't like it when I'm seeing a snake bite area. Now, you can trade that with the Nadex binary options, because as long as you're taking an option, that is above this level but below this level, you have the potential to make money. Okay. But generally, if I'm trading this in spot Forex, I won't touch it. Okay. Now, if I come over here and look at the daily, okay, you can see that you've made a low here, but you've also developed a new support area here, which is still higher than the one over here. Okay, and you've already developed a bullish bar. Okay, so I would think that this bar would actually go up and either test this slow moving average or even test the fast moving average here. Okay. And then going down to the 240, you can see you're overextended. Okay. So that tells me with that overextension that we should at least come down and test this. Now, if we test this area, I would say it's about 132.15. If we test this area and bullish divergence appears or a bullish candlestick formation, that could send it up to test where I anticipated over here, okay, which is between about 32.50 and probably 32.80. And if you look over here, this is where both the dot and the red plus sign are. Again, those would act as potential resistance areas. What's going to be critical is that this blue moving average holds, okay? And if it does hold, then there would be a potential to the upside. If it does not hold, it could come back here, form a double bottom like you've seen on the other charts, and then that would kick it off, okay? Any questions on the USCAD? All right, let's look at the USD Swiss franc. The USD Swiss franc is just one of the slower moving currencies. You do get some really good moves on it. It's just a slower moving. To me, that means I'm probably going to be trading a daily binary versus a 2-hour binary. You do have on the weekly chart, you do have some resistance that is formed right here. You also have the stochastics trying to move down, but notice that they didn't have any momentum here and it doesn't look like they have a lot of momentum here. Again, this would be a snake bite area to me, and it would tell me not to be trading the weekly. If I go and I actually look at the daily, you can see that as that high was made, you had divergence appearing, okay? Now it's coming back and it's testing this previous area. Now this could be the potential of making a head and shoulders area. It would be the very preliminary stages, because what you would need to do is come down right where it's at right now. We need a bearish bar to develop. Now, the stochastics is not overextended. The RSI is telling you that it's upward momentum. The ADX is telling you the same thing. So unless you see that bearish bar come in, then the only thing that you can say is, hey, more likely than not, this is going to go back and it's going to test this high, okay? On the 240-minute chart, again, you see that the stochastics is moving up. The RSI shows the momentum is to the upside. The ADX is showing you that the power is to the upside. So again, what you're looking at is a potential test of the 1.0012 area. I would say that's about 40 pips away right now. It could go as high as 27, okay? But this is the area that you're actually looking at. That, to me, would be a very short-term binary, okay? Finally, let's go and look at the USDJPY. On the USDJPY, we're going to start off over here, and you can see that it's testing the area of resistance. Okay, you've had a lot of resistance in this area. Basically, I would say from about 109 up to probably 109.20. Okay, so a lot of resistance in that area. With the stochastics doing what it is doing right now, I would like to see a bearish bar develop on this weekly chart that would send the market down. Also, it would give you what I call a zero line reject. Usually that's a pretty significant move to the downside. Okay, when you look over at the daily, you can see that this is the area at 108.50 that has really created a lot of resistance on the USDJPY. You also see that your stochastics is overextended. So even though this is showing you that the bias is to the outside, upside, remember that the RSI does not do very well in a sideways market movement. You can also see, if you're looking at the daily, that is a sideways market area. And let me show you. Okay, you've had a high here that was formed back in September, okay? And you have a low here. And they have really not substantiated any price action below that low. So you've got from about 107 up to about 108.50. That has been a sideways market movement, okay? So what I would be looking at right now is whether this is going to develop a bearish bar tomorrow, or will this continue up, okay? The one thing I see as a problem is that stochastics being overextended. The stochastics will do well regardless of whether it's a sideways market or whether it's a trending market. Then when you go down to the 240, this is very similar to what the British pound showed. They're coming back and they're testing this fast moving average, which is coinciding with a prior resistance area. So this is where I want to see them develop a bearish candlestick formation. And if they did, I would probably be interested and doing a potential touch bracket to this one to the short side. Okay, now again, the key to trading those touch brackets is whether the risk is greater than the reward, in my opinion. I don't do inverse. So in this case, you're at 108.40. If we go and look at the USDJPY, you do have a 108.90. So in this case, if you click on the bid, you can see that this one actually has a max loss of 51 and a max profit of 199. Okay, this is a good risk to reward ratio because for every $1 of risk, you're making about 4, I think. Okay, does everybody understand that? Now, could you refine that and even lower your risk a little bit more? Sure. Just by waiting to see, okay, you could go down in time, okay, or you could say, hey, I want to see if it touches the 108.62 area, okay, and then as it touches that and develops that bearish bar, then you could actually go into it. You could even go down to a 60-minute and look for that test. Does everybody understand? Any questions? Does anybody have any questions tonight? Okay. If there's no questions, I do want to give everyone my contact. Thank you, Demetria. My contact information. I do encourage you to visit my website at www.tradershelpdesk.com. I do have a free ebook on candlestick patterns. It's the 5 candlestick patterns that every trader should know. And it's free if you subscribe to the email list. You can also send me an email at gm@tradershelpdesk.com, and I'll be more than happy to respond to any questions. I do thank you for joining me. I hope you enjoyed the webinar, and I hope you have a wonderful, wonderful day.